Amin Reina here from Sage Investors, and I'm going to be walking you through doing a little mind map of my decision to buy shares in Southwest Airlines. This is the second time I've actually owned shares of Southwestern Airlines. I've owned it in the past, and I made a nice little profit on it, and so an opportunity came up again for me to take a look at Southwest, and this is what I came up with that led me to ultimately buy shares in the stock. So every time for every stock I look at, I always ask myself some core questions, fundamental questions about the business. And usually at the end of asking all these questions, I should usually come to a pretty good idea if I'm going to either buy or sell, or buy or not even buy the stock, or maybe park the name if I think the stock is too expensive. So first question I usually ask myself is, in the case of Southwest Airlines, is what do they do? What is their value proposition? What are they selling? What makes them unique in terms of what kind of business they are relative to others? So essentially, if the name gives it away, Southwest Airlines is an airline carrier. So they're in the business of flying people. So but what makes Southwest a little bit different is in the sense that their real value proposition is helping people to get is helping people to get from point A to point B as cheaply as possible. They view flying more as a utility, and not the not that whole luxury, your chair folds into a bed and you can sleep in it, and there's a bar and you can work out and stuff like that. Their job, they feel their mandate is to get people where they need to get to as cheaply as possible and as effectively and as efficiently as possible, and provide them no different than you would go taking a bus to work, taking a bus to the shopping mall. Flying, as far as Southwest is concerned, is about just getting you from point A to point B. So that's what they are. Now, who do they compete with? Well, obviously they compete with other airline carriers. And in terms of carriers, they're kind of almost in the same kind of space as what they are. I would think of companies such as JetBlue. Let me just put that there. JetBlue. Then you'd have your usual United Airlines, Delta. They are specifically a U.S. domestic airline, so U.S. focus. And as we know, the airline industry is extremely competitive, very hyper competitive. And we'll get into the numbers really with Southwest in a second. So there's a lot of players here involved in flying and getting people from point A to point B. So who flies with WestJet? Who flies with Southwest? Chances are the people that are their main customers, or their core customers, are people who obviously are very value conscious. They're looking for a good deal. They're looking for a deal. They just want to get. They're not looking for extras or frills. They just want to get to wherever they need to get to. Small business would be a key demographic, in the sense that they have to, business needs to get done. They need to get to see people and do business. It's an overhead cost, and they're looking to minimize their overhead costs. And so a company like Southwest allows them to get out there, get to travel more, get more closer to their customers. And if they can do it at a lower cost and keep their costs low, then hey, that's all good. So to me, small businesses are a core customer for Southwest. Now, the question also that we have to ask ourselves as investors is, it's all great. They're doing all this, they're offering a very valuable and very popular and very interesting service. But the question is, at the end of the day, from an investor's perspective, are they doing it profitably? Are they making money? Is this company creating tangible wealth? So one of the go-to metrics that I always focus on that helps me answer this question is looking at a company's economic profit, which involves taking a company's return on invested capital and subtracting their cost of capital. And if it's positive, then they're creating positive economic profit. They're creating tangible wealth, organic wealth for their shareholders. So when I looked at Southwest Air, their return on invested capital, and I looked at it over a 3-year period, was coming in between 19 and 25%. And their cost of capital was coming in around 10%. So this is a company that's creating positive economic profit. It's creating tangible wealth. And as investors, we want to invest in companies that can do that, because stock markets and investors put premiums on companies that are demonstrating a consistent ability to create wealth. And Southwest is a company that's been doing this really, really consistently for a long period of time. In fact, I was just reading somewhere, they've gone through almost 48, I think it was 48, it might be even higher, 48 straight quarters of profitability. They've been profitable for 48 straight quarters, which is, incredible consistency. And considering a lot of the dynamics out there in the market in terms of the competitive nature of air travel, economic environment, input costs such as oil, jet fuel, labor costs, despite that overhang around it, they've continued to generate really high levels of return on invested capital. And as an investor, that's what I want to see. That's what I want to look for when I'm investing. So they're clearly making money. Now, next question I always ask then is, how strong is the company financially? What's the financial position of the company? And to understand that, we need to dive a little bit into the company's balance sheet. And when I look at a company's balance sheet, there's a few elements that I'm looking at. I'm looking at their liquidity, I'm looking at their debt levels, and I'm looking at the quality of the company's assets in terms of the ratio or the percentage of intangible assets that they have, like goodwill. So I'm just going to pick these off. So when I looked at the company's balance sheet, they have right now, their cash levels are higher. Let's get that marker back. Are greater right now than their long-term debt. So they have more cash in the bank. If they wanted to retire all their debt tomorrow, they can pay off their debt tomorrow. So they have their liquidity level is pretty high. It's pretty high and pretty strong. When I looked at their debt level, I usually look at a ratio like the debt to equity ratio, and right now it's at about 0.25. So it's just very, very manageable, and which is very low also for a company that has a lot of capital intensive assets. Airplanes are not cheap. Maintaining airplanes are not cheap. So for them to fund themselves really internally and not be dependent upon borrowing as much compared to other airlines is a pretty strong, shows to me how the company is really, really strong from a financial perspective. And in terms of quality of assets, it has very low intangible assets. Again, so these are good things. So when I look at the company's balance sheet, financial position, this is a company that's not going to go out of business tomorrow. It's generating strong, positive economic profit. It's considered, one of the leaders to be in terms of discounted airline travel. It has a very loyal customer base. So there's all kinds of so far the story looks really good for Southwest. Now, the question also is, I need to also ask, we always have to be asking, being really critical also, is what are the risks? What could threaten this business? And in terms of that, I would say a couple of things. One thing is its input costs. Specifically oil price. It's very sensitive to oil prices. Can increase input costs. Labor. Right now, their labor costs are very low compared to other companies because they're not unionized, so they can pay competitive wages, but they don't. They're not stuck in terms of legacy contracts compared to other companies like United Airlines or Delta type thing. Oil prices, they're very sensitive to it, but most airline companies do have a hedging program to kind of control those costs and manage that risk accordingly. Then there's also obviously the economic aspects too. If the economy starts slowing down, businesses are going to start, cutting their overhead costs, and that could potentially impact Southwest and other airliners too. So that's another side of it too. So then ultimately that leads us to the question, okay, it seems like this company is pretty solid in a lot of areas, and it seems like it's a pretty solid business. It creates meaningful wealth, and it's in a good financial position, but that doesn't mean you go out and buy the stock tomorrow, because ultimately you want to buy the stock at a reasonable price, at a fair price that you're going to be able to grow into it and generate a meaningful return on your investment. So when I looked at Southwest on a relative basis, their stock on a relative basis, their forward PE is much higher than their competitors. And then when I looked at it from a discounted cash flow perspective, the stock valuation comes in. I've seen models put the stock value between 50 and 63, and this was a stock that was trading early in the year in the 70s, and it's been basically dropped all the way down into the 50s, and that's kind of where I got interested in looking at it. And so when you're looking at it right now, even if it's in the 50s, it seems like their valuation. So I would say it's fairly valued right now. I don't think it's a dirt cheap stock. It's definitely come a long way from there. But I think another thing we have to understand also is Southwest is a really solid business, and it's a really well-run business. And so the stock market investors tend to put premiums on great companies. Sometimes you just have to pay a little bit more than what you think. As much as we want to try and get a deal on every stock that we buy, sometimes if you want to buy really good, high quality, well-run businesses, you might have to pay a little bit of a premium for it. And so when I took all these elements into account, to me, I'll just write that there. When I look at it, at the end of the day, to me, Southwest to me looked like a best of breed company. I think it's definitely the leading airline carrier into successful, most popular in terms of market share airline carrier out there, and it generates tangible economic profit. It's got a really solid balance sheet. And it's got customers that are really loyal to the company. And they do this value proposition probably better than I think anybody out there. The issue that you got to run into is that, you're going to pay a price for it. But when I look at it, the fact of the matter is the stock was down now in the 50s. If it can get into this, if you can get it into the 60s, I could see it getting into the 60s, maybe getting back into the 70s. I thought, this might be a really great opportunity to buy back in. So when I factored all these elements into it, it ultimately said, I think I'm gonna dip my toe back into it, and so I ultimately made the decision to buy, and I did buy in. I believe at the price my first entry point was at about $55. So there you go. So that's my analysis, my mind map, my thought process that I went into that ultimately led to my decision to buy shares in Southwest Airlines. If you have any questions about this, or any of my other mind map videos that I've done, or I have questions about my investment courses that I teach, both online and in person, you can drop me a line at my website. You can check out my website, sageinvestors.ca. Yep. And or you can find me on Twitter. My handle is @sageinvestors. Feel free to drop me a line, and I'll be more than happy to answer any questions you might have. So, thank you very much for listening in. My name is Amin Reina of Sage Investors.